The war for money, how power hides behind the markets. 1. Losing control of the metals. Gold and silver used to behave like trained pets, predictable, obedient, and easily priced. Not anymore. The old gatekeepers, those steady hands in London's financial temples, are losing their grip. The market's beginning to trade like a wild animal again, and that terrifies them. It's not just about shiny metal, it's about trust. When faith in paper fades, people run to things that can't be printed overnight. So what does that actually mean? It means control is slipping, and history suggests that once confidence cracks, it rarely heals cleanly. Behind the scenes, the global definition of money itself is shifting, from gold bars to digital tokens, from vaults to code. The big players are quietly panicking while pretending they aren't. Footnote: the collapse of control in gold and silver markets signals the erosion of centralized financial authority and public trust. 2. The three strata of power. Think of the world as a corporate org chart from hell. At the bottom are the lieutenants, the visible ones who sign documents and hold press conferences. Above them sits upper management, foundation heads, corporate giants, career bureaucrats. But the real decisions? Those are made at the top floor, an unseen high table that doesn't need a LinkedIn profile. No nameplates. No Wikipedia pages. Their banks aren't on Main Street, they're on maps most people never see. It's a world that runs on quiet favors, anonymous ledgers, and the occasional accident. And when power starts leaking from the system, these are the people who rewrite the rules. So what does that actually mean? It means democracy might be the costume, finance is the actor. Footnote: the global hierarchy operates like a shadow corporation, where visible governments serve as middle management for hidden financiers. 3. Civil War 2.0. The current struggle inside America isn't red versus blue, it's managerial state versus economic independence. One side builds bureaucracy, the other tries to burn it down. Both call it patriotism. This isn't new. History loves reruns. The first Civil War was a color revolution before the term existed: foreign influence, domestic chaos, and a divided people. The same script plays again, only this time the special effects are digital. When institutions crumble, citizens stop debating, they start surviving. Empires rarely die of boredom, they die of accounting. Footnote: political polarization in the United States mirrors historical internal collapses driven by debt, distrust, and competing systems of control. 4. Money is changing. Cash used to feel real. You could touch it, smell it, and hide it under a mattress. Now it's turning into data, tokenized, digitized, and possibly weaponized. The new game is programmable currency, money that can expire, trace, or refuse to buy what someone disapproves of. So what does that actually mean? It means whoever writes the code controls the value. Central banks call it innovation. Cynics call it soft control. Either way, it's coming. The move to digital dollars isn't just about convenience, it's about surveillance, taxation, and the ability to freeze dissent at the push of a button. Funny how every new financial revolution somehow benefits the same people who ran the last one. Footnote: the digitization of money concentrates financial power into programmable systems that can regulate behavior as easily as transactions. 5. Fannie, Freddie, and the middle class. Once upon a time, owning a home was the American dream. Then it became the American trap. The 30-year mortgage was designed to empower families, not imprison them, but the game changed. When Fannie Mae and Freddie Mac were taken hostage in 2008, the middle class lost its most important wealth engine. The rules got rewritten by people who already owned everything. Since then, buying a home feels like applying for permission to exist. The deeper lesson? Whoever controls credit controls the country. It's not a conspiracy, it's math. So what does that actually mean? It means if you need a loan to live, someone else owns your future. Footnote. The post-2008 mortgage system restructured homeownership into a managed form of dependency that benefits institutional capital over individuals.